NFP should not be a day to be avoided. However, when you first start, it is a day where you will tend to make a lot of mistakes. In this video, we're going to break down exactly what you need to be looking for the next time you face NFP. So let's go ahead and begin on TradingView. When we open up the charts, we always want to start with obviously the higher time frame in mind. Right here, we can see that the daily chart is, well, in a downtrend. There's no surprise there. So with that being said, we're going to have to be particularly cautious if we do decide to take a long. Now, the thing about NFP is the framework in which the data is provided, meaning the candle that we see on the announcement, that itself is a bias. We can determine a bias using those points. And let me go ahead and break down exactly what I mean. So let's go ahead, hop down to the lower time frame. We're going to address some levels right off the top, just so we have some context for what we're looking for when we actually start dissecting the NFP structure. So if you can see right here, we have a red dotted line, a dashed line right here. That is our midnight open. This right here corresponds with that time. So with this being said, the idea is if we are going to, expand lower, anything above midnight open would create the wick for the daily candle. Now, on the opposite side of that argument, anything below would create the bottoming wick for a daily candle. Obviously, the daily open coincides with 6 p.m. Eastern. However, there is a lot of validity in using the midnight open, and you'll often see that this level can act as a pivot point. So let's continue. Coming into the data, obviously we have the announcement at 8:30 right here, so we can go ahead and draw out that line as well. Let's see where to go. Let's go ahead and make this dark red. So we got a line right there, right? Boom, right there. So we have this line right here at 8:30. And what we see on the lower time frames is actually pretty interesting. So we get this announcement, right? We get this announcement right here. We can go ahead and get rid of this line, get rid of this, boom, make it real nice and clear for everybody. We can see that there was an initial move higher. Now, where did this move? Well, where did it move into, right? That's the real question. We see that we swept out London highs. We went above midnight open, as well as the new day opening gap. Now, you might be asking, what is the new day opening gap? That's simply that 1 hour time span between the close of yesterday and the next daily candle open. It gapped, created a little bit of a gap, and those levels can often provide support or resistance. It's always important to pay attention to things like that because these levels really determine whether or not we're going to end up bullish or bearish on the day. It's as simple as that. They're opening prices. That's why we have this 9:30 open. We see if we're above it, maybe if we're bearish on this scenario, right, we can see a short opportunity up here, or vice versa. If we're below it, there's a buy opportunity. So that's the simplistic framework, but what do you actually want to be doing when you go into NFP? First and foremost, you're not doing anything until the announcement hits. So you get the announcement right here, boom, move higher, right? And it provides a data low. Data low. That's what we get with that wick. So what we did today on stream, we watched this initial reaction. We saw how off the bat, we saw it wanted to hold VWAP. It wanted to hold midnight open, but then it just rallied into the top of the new day opening gap. So what I was going over in stream, and if you're interested in checking out any of the streams, I post a couple of them here and there on YouTube. You can find them. They're the longer format. And if you're interested in actually trading with us live, the info's in the description, so check that out. But to get back to my point, this gap right here, to target this wick, is an extremely high probability trade. You might be asking, well, why can I trust that? Well, the thing is we have to look right here. We see that we rallied above these key levels, right? Midnight open and the new day opening gap. And we displaced back lower. We created another gap right here. Boom, pushed. And then this right here would be your low risk sell. Why is the data wick important? Great question. The reason is because anytime there's data and it creates this kind of range, we are eventually going to have to trade out of the range. And the thing is, on a volatile day, it's more than likely going to want to trade out of this, or at least try to, on that same day. So with this being said, we were able to find, this is 200, this is down to the 60s. So you have like 150 points of movement. That's a good trade on NQ. That's not necessarily the trade that I was interested in taking. When I saw this happen, don't get me wrong, I've taken this trade in the past many, many, many times. I mostly when I see it like this, when the chart's flipped, right, when it's a bullish scenario, I'll long that all day. This one's a little harder for me to see. I don't see it immediately. However, I know that's not the only trade that is provided within the NFP framework. I'm also aware of the fact that we can potentially see a move after we sweep out that low. That is something that is very, very, very common. To what extent do we rally from there? I mean, that's to be seen. But what we can say for sure is there's more than likely going to be a reaction here. Now, is that reaction going to be based on, just one hammer candle? No, I would not take this entry by itself, because when you start to actually break down what price was doing at this specific time and compare it to a higher time frame, what is the hourly doing, right? It's the hourly chart right here. Bring up some other candlesticks, 15.5, boom. See what we're actually looking like. So we have one up candle. Does one up candle constitute a change in character, a market structure shift? No, it's just simply a pullback. So we do not know that for certain this is going to hold on that first test. It's not until we get a couple more candles of data and we get closer to an appropriate time of day, meaning, well, the New York Open, the 9:30 Open, that's typically when you're going to see that volatility come in. That's what I typically tell my guys to be looking for. I say look for it around the open. You don't need to take the first trade. However, if we do look, there is a framework here. So if you want to break this down, look at the lower time frames. You can see right here. So we got to zoom it in for you. You have an inversion, right? It stabs into the inversion. So this little gap right here, you can take an entry. Where should you be targeting on a move like that? Well, considering that this is in I would call it a very aggressive trade, you want a very simple target. We're talking from 61 to basically 20,100. So about 40 points of range. Is that enough? Is that enough to make a trade? I would argue yes, because the likelihood of this pushing higher, it was there. The fact is, at that time right here, we had YM moving higher, we had ES moving higher, and then NQ just managed to keep up just a little bit, right? And then it kind of came and swept. It came back for the 9:30 open. I wanted to reference it one more time, and much like the first time, it provided a similar framework. So you see right here, that's another inverse gap. Now with that in mind, if you didn't take this trade, or maybe you did, you could also potentially look for this one. Enter on like a retest or something, and then what levels do you have above? Because that's always going to be the $1 million question. Where am I getting out of the trade? What can I reasonably expect? And how can I be sure that I'm going to get there before it gets my trail? Great questions. The answer is look for the obvious structure. We know that this level up here, the new day opening gap, is important because, well, we've seen it referenced all day, all night, right here. These two blue lines, boom, 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 boom. It's been a hot topic. So for us to get back there is more than reasonable. The question is, on the other hand, are we going to close above it? And this is where in real time I break down this stuff. And, if you work with me one-on-one, there's info down below. I teach traders how to identify shifts in momentum. And right here, we can see that there are multiple descriptive qualities about this move that are showing that the momentum is dying. We see that this is rounding out, right? You see long wick, barely closed above the previous candle high, barely closed above the previous candle high, closed within the candle high. One drive, two drives, three drives, boom. Like, we're seeing that this thing is not maintaining its same enthusiasm, its same momentum, and this rounding effect is actually what creates a very high probability scenario for a sell setup. So with that being said, we can continue to push the tape forward a little bit, and we'll see not only, one potential trade right here. You could potentially get in short right here on the midnight open flip with the fair value gap, market structure shift, target something maybe down here. Maybe you target one of the fib levels, or you could just potentially wait, right? Comes back to the same price level. And again, we're talking about right here, this bearish gap right here. The fair value gap overlapped with the new day gap. That's a very, very, very strong indication that price is going lower. And where can we reasonably expect it to go? You would want to look for some sort of structure, right? These lows seem reasonable. Maybe you focus on these lows. Maybe you focus on the 9:30 open. Whatever your cup of tea is, that's perfectly fine. You just need to find something that is within reach, and it's not going to give you too much hesitation, right? So you can see right here, if you went to the data low, once again, this data low remained relevant up to this point, goes through, right? It pulls back a little, maybe gives you a re-entry opportunity. Maybe you take an early trail, but if not, you can have easily taken this through the session lows as well as the prior day low, as it is shown right here with this little indication. So that is a quick rundown on how I go about looking at NFP. I have two main profiles when I'm looking at NFP. There is either a reversal type profile like this, where you're going to trade to maybe one side of the wick, right? That could be one part of it, and then rotate back. Or the other one would be a just straight up continuation, where you see a displacement on the data, it creates some sort of base, you sweep the lows or sweep the highs, and then you continue in the direction that the data moved it. So with that being said, hope you learned something. Maybe you picked up a gem or two. If you did, leave a like, comment, share, and subscribe. Thank you, and we'll talk again soon. Take care.